At this time, it is my honor again to introduce to you your NASFA President and CEO, Melanie Story.
Good morning, everyone. Good morning. Everybody recuperated from the silent disco? It was super fun. I have to go. I wasn't sure, but it was super fun. It's great. Appreciate seeing everyone this morning, and most especially so excited and grateful to our federal colleagues for joining us this morning for the federal update. This morning we're going to be joined by David Musser. He is at Federal Student Aid. He is the acting director of the Policy Implementation Division, and he has been with the department for 15 years. So these are long-time committed people to our work, committed colleagues and partners in our work. We're also going to be joined by Tammy Abernathy, who is in the Policy Coordination Group in the Policy Planning and Innovation Division of the Office of Post-Secondary Education. You can see why they don't have cards, because it's very, very long. And they will both be leaving us here in Anaheim at some point to head back to Washington for the negotiated rulemaking that starts next week. I will apologize on behalf of Tammy Abernathy in advance. She had her flight canceled at the last minute overnight, so she will be presenting this morning, going through her work, but then she will be making a slightly early exit, but David will finish the presentation with us this morning. They will not be able to take questions for this session, but all of the FSA colleagues will be joining us at the open forums, both the policy open forum this morning at 11, and then the general NASFA open forum later this afternoon. I believe it is at 3, and they will be there to hear questions. So do please keep your questions, bring them, we can share them with them, we can bring them back to them. So there will be an opportunity to share your questions. So no year is easy. I know we've been talking about how every year seems to bring new challenges, but we certainly do seem to find new ways to make them difficult. But these two guests are familiar friends. They work on our behalf, and we are grateful for them spending their time with us today. So please join me in welcoming Dave Musser and Tammy Abernathy. Maybe.
I was going to start singing. Yeah, yeah, yeah. All right. What an exciting time for us. We're certainly not bored. We really are very excited to be with you here in more ways than one, right? Because we're here, standing, sharing. I'm going to use my water. I'm sorry, I've had just enough coffee to be kind of cheeky, so there's no telling what we're going to end up with today. As Melanie said, I am the director of the Policy Coordination Group, in that big, long title, but basically in OPE, that's what we call it. And so many of you I have worked with for many, many years. I've been in this industry for over 38 years. I started when I was 2. That's the story we're sticking to. But I've been at the department for 13 years, and I left from a wonderful second largest guarantee agency in the world, in my world, and I came to the department when federal student loans changed, right? So I've learned a lot, I've grown a lot, and I have especially treasured the many colleagues and friends that I have created throughout the years. And I want to reflect back on what LeVar said. He said, be happy where you are. You're here for a reason. You're here for a purpose. You have a mission, and hold that. And I believe what we do is a mission, whether you're on this side of it, you're on that side of it. Look at this. And then Melanie beautifully said about a net. And I looked at this room, and I've had several people this morning who are part of my net, who have been a part of my net for years. And I thought, what an incredible way to say the resilience, the adaptability of all of you, and then you come out to a song called I'm Still Standing. And then I was going to sit down, so I thought, better, I probably should stand. But anyway, so I'm going to try to use this clicker, never having touched it before, but it does have a big green arrow, so I'm thinking that's the one I need to switch. We do have an agenda today. I will be discussing the policy. Usually, when Dave and I do things, we used to work together in the operations side of FSA, and then I moved over to OPE, and I'm still blessed to be able to work with my FSA colleagues so closely. And so we deal with all of the changes for the Higher Education Act, the Title IV regulations, and then we work with our implementation team. They'll tell us if we got a policy wrong, which we would never do. Never do that. That you can't maybe not understand it, we wouldn't do that either. But we are very busy these days, as you heard, thankfully so. And one of the things that I wanted to say is alone, we can do so little. Together, we can do so much. Helen Keller said that. We're not alone. You're not alone. Dave and I are here for you. The department is here for you. And we want you to reach out to us where we can help you. We are here. We are present. We are committed. It is our mission. Let us help you. We will be discussing negotiated rulemaking. Melanie mentioned that. It starts Monday. No pressure there. I'm the federal negotiator. We'll be discussing negotiated rulemaking activities, regulatory updates, federal loan program updates, and recent policy guidance. Mr. Musser has the lion's share of the slides. Oh, darn. And they will include FAFSA operational updates, Pell Grant minimum maximum awards, campus-based funding, verification, operational updates on gainful employment, financial value transparency, electronic announcements, outreach, including school outreach for return to repayment, compliance updates, FTI and FAFSA data use, and cybersecurity. Now we get to the fun stuff of negotiated rulemaking overview. How many of you have participated in negotiated rulemaking before? Raise your hand. Really? That's not that many. Y'all survived, right? Pray for me. The foundation of negotiated rulemaking process is found in the Regional Meetings and Negotiated Rulemaking Section 492 of the Higher Education Act of 1965 as amended, also known as the statute. Don't call it a statue, like I sometimes do by mistake, or you'll get corrected. Imagine that. It provides a number of activities that the Secretary does. The biggest is that we obtain public involvement in the development of the proposed regulations. We obtain the advice of and recommendations from individuals and representatives of the groups involved in the student financial assistance programs, our stakeholders, you, all throughout this room, stakeholders, all throughout the community, legal aid, civil rights, all of those. We work collectively to try to come up with the best that we can come up with given the circumstances that we're in. We provide for a comprehensive discussion and exchange of information. We consider such information that may be used in the development of the proposed rules and the final rules. We follow the negotiated rulemaking process. There are ways that we can waive public comment, the public comment process. Many times people get confused, like, oh, you're waiving negotiated rulemaking. We're not waiving rulemaking. We're waiving the public comment process in situations where the Secretary determines it to be impracticable, unnecessary, or contrary to the public interest. We publish a summary with proposed regulations in the Federal Register, and we seek lots and lots of comments from all of you and everyone else in the world. Lots and lots of comments. Our last package had over 148,000 comments. I would say thank you, but I would not mean it. And then, of course, we have a website that has all of our rulemaking updates, policy on that website. That is listed as a link on your screen, or on the screen. Oh, hello. So just beware that we are starting the rulemaking process. There will be one session. We'll talk a little bit about that later. This graphic depicts the process. high level from start to finish. It's the overview of the regulatory process part of negotiated rulemaking, and it's really called Regulatory Negotiations, or Reg-Neg. That is not nearly as sexy sounding as Neg-Reg, so we call it Neg-Reg. For what reason, I have no idea, because it's rulemaking and not regulations, but okay, we're gonna go with it. Before my time. Remember, I started when I was 2. The first step in this process is to inform the community of our intent to negotiate and announce topics for consideration. We solicit public input by holding at least one public hearing, which provides yet another opportunity for the public to provide input into the neg-reg process and the topics. We publish another notice seeking nominations for non-federal negotiators. The next steps after that include negotiating committee meetings, preparing draft amendatory text, holding negotiations, and taking final consensus on the last day of negotiations. That is the purpose of rulemaking, is to try to reach consensus on the rules. So we work with our stakeholders, we work with our community, we work with everyone trying to get to the rules that are the best that we can come up with collectively negotiating. The department drafts and then publishes the publication of Notice of Proposed Rulemaking, NPRM. And that goes in the Federal Register, and then we have a public comment period, which is usually 30 days. It's not usually less than 30 days, but it can be up to 90 days. But we typically say 30 days because we're under some tight deadlines to turn things around. We receive comments throughout that 30-day period, or whatever that comment period is, through regulations.gov. During the next phase, we process those comments by reviewing, redacting if needed, summarizing, and then we respond to the substantive comments in a publication of the final rule in the Federal Register. Public comments, when communities or people from the community, you guys make public comment, what we are looking for there is actual information about the proposed regulations. We love hearing all the testimonials. Sometimes they're really hard to listen to read, because they're so heartfelt and people are hurting. And sometimes the rules we make don't really help that, and we're kind of stuck, but we care. And when we read those things, it means something to us. But that does not help us write the rules. We appreciate that public comment. We value all of our public comments, but the ones we need are from you in the community about the rules that we're proposing. What's working? What's not working? Did we get it wrong? Is there something else we should consider? Because even with this beautiful process of negotiated rulemaking, we still might miss one piece of it or several pieces of it. And so we want to hear from you on these proposed rules. Please do not be shy. That's really funny, as if any of you are. No, we're not shy, not at all. We finally implement, and that's where our wonderful FSA colleagues come in, because they take what we write and then they action it for you guys. And we hope that we've given them enough good stuff to work with and not leave them trying to finagle ways to make it work for the community. If the rule is published by November 1st, the effective date of the regulations is July 1 of the following year. There could be early implementation. I have a few slides that will dive a little bit deeper into this. In preparing this, Dave and I talked about implementation date versus effective date, right? What does that mean? Let's explain that to our community, because there's been some considerable confusion around that. An effective date is the date when new rules, laws, processes, or policies, in this case, become active and can be enforced. Whereas the implementation date refers to the date by which necessary changes, edits must be in place to enforce those policies, to action those policies. And essentially, the effective date marks the date of enforcement, while the implementation date indicates when the required preparations should be completed. As our rules are subject to the statutory master calendar, the next graphic will show you what happens. Oh, wait, I forgot. Hold on. This one is on or before November 1st. So if we are publishing a rule on or before November 1st of 2025, then the rule will be effective July 1, 2026. This next slide, if we publish after November 1st, the rule is effective July 1 of 2027. So we are fixed to that master calendar. Okay, so now you have that basic knowledge. Let's take that in and talk about our rulemaking activities. Excuse me while I get some water. I think I've had just enough coffee to be jittery. In January 2024, the department held its first negotiated rulemaking session for program integrity and institutional quality. The department held 2 other sessions in February and March of 2024. And the 6 topics included in this negotiated rulemaking were separated into different NPRMs, Notices of Proposed Rulemaking. Only 3 of the 6 topics, TRIO, Distance Education, and Return to Title IV, made it into the Notice of Proposed Rulemaking. The department did not publish an NPRM for accreditation, cash management, or state authorization. We terminated the rulemaking proceedings for these 3 topics in a Federal Register notice on December 26, 2024. The department can revisit any of these topics in the future, but it would need to conduct negotiated rulemaking again. The NPRM for TRIO, Distance Education, and R2T4 published July 24th, 2024. The public comment ended on August 23rd, 2024, and we received 554 comments in response to the NPRM. Oh, how I wish that was my package. The final rule published on January 3rd, 2025, and it makes substantive changes to distance education and return to Title IV and only technical updates in the TRIO programs. That effective date is July 1, 2026. Now, don't you all feel good that you know about this implementation and effective date? Yes? Sorry, I thought we did something here. You guys are a tough audience, tough crowd. Optional early implementation for some of these provisions was effective February 3rd, 2025. So let's dig a little bit deeper into some of the individual changes. The distance education rule adds in section 600.2 in our regulations a new definition for a distance education course, and will add, or did add, a new reporting requirement for distance education and correspondence courses. As the department stated during negotiated rulemaking, the new distance education reporting will be collected through our National Student Loan Database System, or NSLDS. This new reporting requirement isn't effective until July 2027, and the department will provide more information about this reporting process as we get closer to that date. Some of the provisions of the NPRM were not retained for the final rule. For distance education, we will not keep the provision from the NPRM that would have limited asynchronous distance education coursework to credit hour programs, or the provision to add virtual locations as an additional location where a school provides 100% of an education program through distance education. The final rule for return to Title IV codified long-standing policy that an institution required to take attendance must, within 14 days of a student's last date of attendance, assess whether the student has withdrawn. The Secretary exercised their authority under the Higher Education Act, Section 482C, to designate early implementation beginning February 3rd, 2025, and certain regulatory changes to Part 668 in our Title IV regulations. The 2 provisions designated for early implementation are allowing an incarcerated student enrolled in a term-based program who takes a leave of absence to return without resuming coursework at the same point, and exempting institutions from performing a return to Title IV calculation under the withdrawal exemption and regulatory provisions under 668.22. In the past, there were only 2 ways to calculate the percentage of the payment period a student completed in a clock-hour program. The department removed one of those options to simplify this process, the R2T4 process. A module will only be included as part of the payment period and used in the denominator of a return to Title IV calculation if the student begins attendance in that module. The department made one more important change to the return to Title IV regulations, adding an optional exemption in situations where the institution treats the students as having never attended. To qualify for the exemption, all conditions listed on the slide must be met. This provision is entirely optional. It was meant to reduce administrative burden in cases where schools offer a particularly generous refund policy. Schools can choose to do this, or they can apply this exemption on a case-by-case basis or forgo this exemption entirely and continue performing R2T calculations for all withdrawn students. Some of the provisions from the NPRM were not retained for the final rule. So for the return to Title IV, we did not keep the provision that would have required an institution to take attendance for each course offered entirely through distance education, or the provision that would have allowed a student who received a loan disbursement as part of a Title IV credit balance but never began attendance in a payment period or period of enrollment to repay loan funds they received under the terms of their promissory note. The final rule for the TRIO programs. These changes reflect that Palau is no longer a trust territory, but instead a freely associated state. The other proposed changes to TRIO, which would have further expanded eligibility for disadvantaged students who have enrolled or seek to enroll in a high school in the United States, territories, or freely associated states, were not included in the final rule. After reviewing the comments received on the NPRM, and you guys know that whole process now, again, I'm trying to get interaction here. Tough crowd. The department decided not to finalize the federal TRIO programs other than the technical change mentioned here. So in order to reconsider how best to ensure that the TRIO programs are able to reach all populations of disadvantaged students. Our favorite topic, I know it's coming, the SAVE plan status. If you were lucky enough to attend my colleague Eric Hardy's session yesterday, I think it was, then you know all about this and I can skip this slide. Just kidding. All right, in July 2024, an injunction was filed to stop the implementation of the Saving on a Valuable Education plan and enjoined the entire rule. When we negotiated, we did not just negotiate Saving on a Valuable Education. We made technical corrections to outdated terminology. We changed some corresponding edits, some cross-references. We changed some definitions to provide clarity. All of that got thrown out. So the baby and the bathwater and everything else in between got thrown out with that injunction. Okay. We discontinued new enrollments and placed borrowers in a non-interest forbearance due to pending litigation. In March of this year, the income-driven repayment application and the online consolidation application became available. Again, I hope you watched or you heard or you will watch Eric Hardy's presentation on this because he will give you the in-the-weeds stuff that you need to have that I will not provide you during this session due to the essence of time, and I have to share the stage with Dave. We publish, well, it's a good thing. Come on, don't you think it's a good thing? I think it's a great thing. In my world, it's a great thing. I mean, we did come out to I'm still standing, so. We published a Federal Register notice on April 4th, 2025, announcing our intent to establish a negotiated rulemaking. We announced that we may discuss PSLF, Public Service Loan Forgiveness, pay-as-you-earn, and income contingent repayment, other topics that would streamline current federal student financial assistance programs. 2 public hearings were held, one in person on April 29th, 2025 in Washington, D.C., and one virtual hearing on May 1st, 2025. The comment period ended on 5/8/2025, and we received 7,929 comments, and now you know I was happy the other one just got 400. Thank you, public. We really did get great comments, and we appreciate you taking the time to write in and tell us about things that you think are important for us to put on the negotiated rulemaking agenda. So your voice matters to us. On May 12th, the department published a Federal Register notice announcing our request for nominations for a negotiated rulemaking committee on the student loans and affordability part of the policy world. We received nominations for our non-federal negotiators. We announced our plan to negotiate on the following topics: refining definitions of a qualifying employer for purposes of determining eligibility for the Public Service Loan Forgiveness Program, and revisiting family size, restructuring repayment plan provisions, including the alternate repayment plan and certain other provisions of the rule published on July 10th, 2023, of what was in that SAVE rule. However, the department has since decided to negotiate solely one topic on the refining definitions for the purposes of determining qualifying employer eligibility for the Public Service Loan Forgiveness Program. Negotiations will be held in person at the department at the Lyndon Baines Johnson Building. They start Monday and go through Wednesday, June 30th through July 2nd. They will be live streamed. You are able to come in if you are in the area and sit and observe the negotiations, and if there's still time, you are able to provide public comment from 3:30 to 4 on Monday and Tuesday. We start at 9, we break at 12 for lunch, we come back at 1, we break at 4, and that is after our public comments from 3:30 to 4. The negotiators were chosen and notified, and some of you in this room received the lucky honor to serve with us. It certainly is our honor to have you. We are glad that you volunteered for this, for without you, we cannot do our jobs well. Now you've heard all about our negotiated rulemaking efforts. We're going to talk about my love ever since I started in federal student aid, the federal loan programs. And Perkins. Let's start with Perkins. Oh, that's funny? I get it. All right. I see how you guys are. Perkins is one of the oldest federal loan programs, if not the oldest. And institutions that continue to service their Perkins loan portfolio must report outstanding loans to NSLDS monthly and complete their annual fiscal operations report and application to participate, or better known as FISAP. You're required to report on your Perkins loan revolving fund activity. Accurate reporting enables the department to break down the revolving fund balance, what's come in through that year, and we break it into what you get to keep, to take out and keep and spend as you like. Who doesn't like that? Again, hard crowd, guys. This is money you get to take back and use however you want. But then you do have to pay us too, so I mean, it is a catch-22. The institutional share, like I said, you really can remove that. You can do anything you want with it because you're not making new loans, and that's why we're breaking down the fund every year. It is a requirement under the statute that the excess cash come back to the department. For many years, we didn't collect it because our expectation was you didn't have any because you're reusing it to give new loans out. But since the program has since started the wind-down process, there's no new loans to give out, so therefore the breakdown has to come both into the institutional share and the federal share. I hate to be the bearer of being a little ugly about this next stuff, but we're having a lot of FISAP errors. The reporting, how schools are reporting the removal of the cash from their fund and the repayment of the cash to the school and the department under the distribution of assets process, there's lots of mistakes. There's lots of data that's incorrect. If you are going to continue to participate in the Perkins Loan Program through servicing your portfolio, you are administratively capable. You are culpable, capable. You've got to do certain things according to the regulations. What we are finding is schools that must have accurate Perkins General Ledger accounts, journal entries, reconciliation, balancing your funds. Some schools are not doing that, and they're not doing it well, and it's not correct. And it filters through our systems, it filters through your systems, and it's something that we need to take a pause and look at your respective institution and your desire to continue servicing that portfolio, and these are things that we need to remedy. So we are really concerned that if you do not understand where the errors are and you don't understand how to fix them, we need you to reach out to our operations team. Now, Rebecca's probably going to be really mad at me when she hears that I said that, but she's actually the one that told me to remind you all, so I think she is very capable and willing to help you. But Perkins is a really old program, and there's lots of information, perhaps maybe before you started service, before you became the financial aid professional working on this portfolio, but there's things that have to go way back. Everything has to match. So we need you to make a conscious effort that Part 3, Section A of that FISAP that's coming from your accounting records, that you have reconciled the collection data with the servicer, their Perkins accounts on the school side, your cash account balance as of June 30th must be accurate. We expect that you will take this seriously and that you will continue to dive into those records and get them right. If your portfolio is serviced by a third party, it does not remove your responsibility as the institution to oversee your servicer, to make sure that the information is reported accurately, to make sure that you're not duplicating files when you're reporting. I'm done preaching, I'm sorry. Oh wait, I'm not. Just kidding. The due diligence provisions are located in Subpart C of 674. They go from 41 to 50, 9 provisions that are requirements for you that continue to service or for you to oversee your servicer. You must be performing these quality checks because it's your responsibility, not your servicers. Even if you're contracting with them, you've got to make sure that that's done. For those of you that did not attend the repayment session that I keep saying that Mr. Hardy presented, there is a new report in NSLDS. We heard you. We heard that the report that we had before was not really helpful. So our wonderful team, our operations team, created a new Perkins Loan Portfolio Report, PRK-PF1, great title, PERC Performance Report. Please run that, and it's in an Excel spreadsheet, so it runs almost instantly, and it gives you your data right away to take a look at it. I thought that was going to be good news, too. Thank you. I like that. I'll stand up here until somebody gives me something. Just kidding. I can't take Dave's time. Institutions are required to assign to the department any loans, any Perkins loan that have been in default for 2 or more years. So if you have assigned your loans to collections agencies, I'm sorry, you have to take them back. It is a requirement that you give those loans to us. You assign those loans to us. Now, if you are receiving payments on those loans, borrowers are responsive, that doesn't mean, you call us, you talk to us, and you say, hey, I really am making headway on this loan, can we please keep it? And the department says, well, if you're collecting, if you have moved a borrower into a repayment status, like a satisfied repayment status, then yes, you can continue to collect those loans. We make a record of it, you make a record of it, and we're all happy. But if you're not, we need those loans. This has been several years that we have called these loans. We've given numerous pauses because of COVID and other things, rightfully so. If you're not in the office, you don't have access to the data, you can't reach out. You know, we're not heartless. Don't anyone throw anything at me. We do understand, so reach out to us, communicate with us. That's the best way for all of us to do what's right. However, if you don't start doing what you're supposed to do, you're probably going to start getting nasty grams. So it's time for us to say, okay, now we expect these things to come in as we've called them, repayments going back in, all of these wonderful pieces and parts. Let's start seeing these loans come in. And some of you, we thank you for the ones that are diligent about doing everything that we've asked for. We appreciate that. We know you're doing more with less. We kind of can feel that with you these days for reasons we don't need to mention. Assignment documents. You should make sure that your servicer is not creating duplicate records in NSLDS when the loans are submitted for assignments, which means anytime the loans that you are submitting on the assignment form are submitted into the system and it doesn't match NSLDS, it creates a duplicate record. Well, now we have a mess. So please look at that a little more carefully. Pull those reconciliation reports, pull those servicer reports, get those worked, get those reworked, and let's try to make sure that we clean up the data as best as possible. Now I'm done with Perkins. I didn't even get a clap. Thank you. We're learning. Okay. The Joint Consolidation Loan Separation Act, and I know that in the community you guys are thrilled about this because I cannot tell you how many times I heard, when are you going to do it? When are you going to do it? When are you going to do it? And we knew we needed to, and thank you for your patience, but we've done it. And while it was signed into law on October 11th, 2022, it allows for the joint consolidation loan borrowers who have either direct loans or FFEL loans, the other old loan program, to separate their joint debts into new individual direct consolidation loans. In October 2024, borrowers could apply for a joint consolidation loan. And we started processing these applications in December 31st, 2024. Happy New Year to those people that received those. Again, borrowers, thank you. Borrowers who have applied for joint separation are in forbearance. They're like, I'm just going to clap to shut her up at this moment. Have you met my husband? No, I'm just kidding. Borrowers who have applied for joint separation are in forbearance while this separation is being processed, and those who requested the limited public service loan forgiveness waiver by October 31st, 2022 must apply by June 30th, 2025. Tomorrow? No, Monday. I have no idea what today is. And therefore, if they do apply by June 30th, the waiver benefits will be applied. All of the joint consolidation loan borrowers have until June 30th to also apply for the IDR one-time account adjustment as well. We have not yet finalized the timing for the actual application of the payment count adjustment and the limited PSLF waiver, but you have to do it before June 30th so that it will be processed at whatever time we are able to process those. And that information you will receive from our Office of Federal Student Aid and Communications on FSA Partner Connect. Oh, I think I missed a slide. I'm so sorry. All right. Now they're clapping. That I missed a slide. That's funny. That's a good one. That's a good one. All right. So on December 23rd, 2024, the Stop Campus Hazing Act, or Public Law 118-173, was signed into law, actual law. This act addresses broad and important concerns about hazing at institutions of higher education. And this act also amended Section 485F of the Higher Education Act, renamed in the Higher Education Act as the Jean Cleary Campus Safety Act. This letter that we will publish sometime soon, I promise, will summarize and provide requirements for institutions to implement the Stop Hazing Act and identify any of the applicable effective dates. I had a note here that said may already be published, and I am so sad that I wasn't able to get that done before this conference, but it was not for lack of trying. Some important dates are listed on this slide, and institutions participating in the Title IV programs must, by June 30th, 2025, which was a couple days ago, develop, implement, and disclose anti-hazing policies and hazing prevention and awareness programs. Beginning January 1st of 2025, compile and disclose in their annual security report statistics for incidents of hazing that are reported to campus security authorities or local police. And a reminder for the annual security report, it is due October 1st of each year. By December 23rd, 2025, the schools will need to produce and publish a campus hazing transparency report if the institution has a finding of a hazing violation. It must be updated at least twice a year unless there are no instances of hazing. This Dear Colleague letter discusses definitions of hazing in student organizations and provides examples of campus geography to explain where Clery requirements apply. The department will also provide additional training and technical assistance in the future. This letter, when published, will remind institutions that they may voluntarily provide information about hate crimes to members of their campus communities beyond what the Clery Act requires to be reported. And an institution may also voluntarily provide the subcategories and groups who were targeted based on their actual or perceived membership in a covered bias category. And although not required, we do encourage institutions to voluntarily provide this information to students, employees, other stakeholders, especially in consideration of heightened concerns about acts of hate on our campuses or your campuses. I'm providing this information regarding the conforming changes from this law to the department's regulations on the institutional security policies and crime statistics in our regulations at 668.46. I encourage you to take note of this slide and be on the lookout for the Dear Colleague letter and any information to be published. The name of student organizations, general description of the violation, including whether the violation involved the abuse or illegal use of alcohol, the findings of institution and any sanctions placed on the organization by the institution, the dates the alleged incident was reported to have occurred, the date the investigation into the incident was initiated, the date the investigation ended with a finding that hazing violations occurred, the date the institution provided notice to the organization that the incident resulted in a finding that a hazing violation occurred, and you may also include other information necessary to provide context or information that is required by state disclosure laws. Please do not include personal identifiable information. On May 1st, 2025, the department published Dear Colleague Letter Gen 2503. This Dear Colleague letter provides guidance on changing accrediting agencies, including the process to request approval of the change and the limited circumstances under which the department would not approve a change of accreditor. This guidance in the Dear Colleague letter supersedes previous guidance from Gen 2210 and Gen 2211. The department will expedite review of applications to change accrediting agencies, except in rare instances where an institution lacks reasonable cause. The cause for changing accrediting agencies is not reasonable if the school has had its accreditation withdrawn, revoked, or otherwise terminated for cause during the preceding 24 months, or has been subject to a probation, show cause order, or suspension order during the preceding 24 months. Even in one of these situations above, the department may still approve the change if the prior accrediting agency did not approve the institution or did not provide the institution its due rights process, applied the standards and criteria inconsistently, or the adverse action, probation, show cause, or suspension order was the result of a prior accrediting agency's failure to respect an institution's mission. So when it begins the process of changing accrediting agencies, the institution should submit the reasonable cause request certification form that is attached to the Dear Colleague letter to our case teams at ed.gov. While this Dear Colleague letter is very technical and aimed more toward business offices and auditors, we did want to bring it to your attention so that you can make sure your business office is aware. This wonderful, fabulous Dear Colleague letter that just started the clearance process will be published soon, coming to a school near you. Just kidding. It gives guidance on the use of federal tax information, or FTI, for the FAFSA, or Free Application for Federal Student Aid, and non-FAFSA data. Changes made under the Higher Education Act, the statute, the Internal Revenue Code, the Family Educational Rights and Privacy Act, I still see people going, FERPA, permit, again, that was funny. Or am I too old? Nobody here remembers that presentation? Okay. Anyway, it permits and limits the access, disclosure, and use of FTI, FAFSA, and non-FAFSA data by institutions of higher education and state higher education agencies that administer state financial aid. This Dear Colleague letter will provide updated guidance and information on the permitted access, disclosure, and the use of FTI and the FAFSA and non-FAFSA data by schools, state agencies that administer state-based financial aid, or again, state agencies, and applicable contractors defined under the Higher Education Act, Internal Revenue Code, and FERPA. The guidance further clarifies how FTI and FAFSA data may be used for the purposes of the application, award, and administration of aid, research partners, FAFSA completion initiatives, means-tested benefits outreach, and aggregate reporting. It also provides additional information about student written consent needed for disclosures to third parties. Please note that this Dear Colleague letter supersedes Dear Colleague letter Gen 24129. The guidance for state grant agencies and institutions of higher education on the access, disclosure, and use of FAFSA data for the application, award, and administration of student aid programs. Our wonderful FSA partners will be providing additional training on this guidance in the coming months. We just have to get it published first. At this time, I want to thank you for allowing me to share in a little bit of your federal update today and recognize that we are still standing and being so proud of you all for not throwing tomatoes or anything else. But you can do that with Dave because I'm leaving. No, I'm just kidding, just kidding. No, Dave is my friend. I don't want you to throw tomatoes at him either. Thank you so much. Let's transition to Dave. I appreciate it. If you need me, my information is on the slide on the back. Please feel free to reach out. Have a great conference.
All right. Hello, everyone. I am going to try to find the mic that Tammy dropped. Here we go. It is a real pleasure for me to join all of you today. I've heard so many people thank us, all feds, for being here, and it really means a lot to us. This is a really important conference for us. This is our first opportunity of the year to engage with you guys. This is where we learn a ton from our colleagues in the financial aid community. And we're really glad that we have the opportunity to come here and give as much information as we can, good and bad news, and then get information from you about what we need to change, what we need to improve. So thank you so much for having us. I actually want to start with a little personal note. So in 2006, which seems like ancient history now, I was an assistant director, bright-eyed and bushy-tailed, of financial aid, and I came to the NASFA conference at the Swan and Dolphin Resort, so the other Disney World. And I was on a panel where we talked about how challenging it was to implement the ACG and SMART programs. And I think back to that and I think, wow, I want to go back to ACG and SMART. But I also remember watching Jeff Baker up doing the federal update and exhorting people, ACG and SMART are giving more money to students. Stop complaining about them. That was Jeff. But I just have to say, it's an incredible pleasure to actually be up here talking with you guys at the federal update. I remember thinking, I wonder what that's like. I wonder what that guy has to do to prepare for this. But here I am. So I want to actually start, make sure I get this going, with what I don't usually get to do, which is some unequivocally good news. So FSA has been putting a lot of time and energy into improving the FAFSA experience this year, and we're seeing some results. So on this slide you see on the left there, as of June 20th, we had processed over 13 million FAFSAs. So if that sounds like a big number, it is. That is 15% higher than in 24-25, And if you're saying, well, you're comparing that against a very low bar, that's true. I get it. However, that's also 6% higher than the same time in 23-24. So we're actually seeing a lot of new FAFSAs come in, and along with that, we've improved our responsiveness to folks who are contacting us. So you can see on the right hand of the slide, the amount of time it takes to get an answer on a call is about 16 seconds before somebody picks up, and if you're working with the chat, it's only 5 seconds. If you're interested in more details about how some of the specifics about how things are going on the FAFSA, I do highly recommend that you check out the FAFSA update that Erin Lemon-Strauss and Kira Mosley-Hobbs presented. They did a great job. That'll give you a little bit more detail on all of these things. I also wanted to mention that although our federal slides are not up on the NASFA website right now, they will be after the conference is over. So I know folks want to take photos of the slides, that's fine, but they will all be available eventually. And there will be also recordings of all of the federal presentations available for you to watch. So thank you, Melanie, thank you, NASFA, for doing that for us. So next I want to talk about, there's a beta going on for 26-27. We did this in 25-26 and we're doing it again. We think it was extremely helpful and we want to make sure that we are rooting out any issues early so to ensure that all of our applicants have a good experience once they get started. There will be 2 phases for the FAFSA beta. The first phase will start in early August and will involve a very limited set of individuals and a lot of FSA contact where they can identify problems quickly and help those applicants through the process. Then in September, we will begin phase 2 of the beta, and this is where I want all of you to sort of perk your ears. That beta is available to anyone, and not only is it available to anyone, but it will involve real FAFSA applications and real ICERs. The ICERs are going to start coming to your offices for anyone who does log into the system and goes through the beta process, which is essentially the full FAFSA experience. So you may get questions about students. Did you get this? I am really early getting in my application. So just something to know, you're not required to take action immediately on those. And in fact, there may be cases where it's much more prudent not to, especially in cases where you're working with funds that are limited. But we wanted you to be aware that those are coming likely by the end of the summer as we enter the second phase of the beta. So we know that adds some additional complexity for you guys operationally, but this has made a huge difference to our ability to improve user experience on the FAFSA, so we think it's important to do this again for this year. So now I want to talk through some of the changes that we're going to make to the 26-27 FAFSA. So first one, back in February, I'm sure you're all aware, we amended question 11 on the student demographic information in accordance with the President's executive order to change the question from what is the student's gender to what is the student's sex, and change and remove the non-binary and prefer not to answer responses. So as a reminder, answers to these questions do not impact eligibility for aid, and they're not shared with institutions, states, or any other partners. We know that this may be a little confusing for some applicants, but we're carrying out the President's order. We also amended question 12 on student race and ethnicity. Where we removed the separate Hispanic, Latino, and Spanish origin question, and we added the new categories, Hispanic or Latino, and Middle Eastern and North African. This is really just part of a broader government initiative to switch over to these categories, including in the census. We had been working on this for some time. The last 2 things on this slide, however, are bigger news. First, if you look at the one that says real-time SSA match, that's what we mean. And unlike the current year FAFSA, where it takes up to 3 days to do the match, this will be instantaneous in 26-27. So we really think that'll speed up the process for a lot of applicants. And you see at the bottom, the second major change, which I will walk through in detail, is the FAFSA contributor workflow. So the headline here is that the FAFSA will no longer require applicants to provide a great deal of PII for their parents when they go through the parent part of the process. Yeah, so we know that applicants don't know their parent's social security number. You know, they make that phone call and the parent's like, who is this? Is this real? So we have a new way of doing this that we think will be a little bit more streamlined. I'm going to go through it a little on the next few slides just so you can see what it looks like. So here is that part of the FAFSA. Invite your parent to the FAFSA form. Clean, no questions about all the parent information, just an email address, and that's all. And so I learned something, actually. Aaron Lemon-Strauss mentioned as well that the other improvement that they've made is the email address that you add here for the parent does not have to be the same as the one that the parent included on their FSA ID application. So the way that we got around this is we're using a unique code that will go to whatever email the student enters. So if the student doesn't know their parent's favorite email address that they used for the FSA ID process, as long as they get an email that the parent gets, that the parent will receive that code. And so this is what it will say when the student has completed that first process. We've sent this to your parent. They have to go through the process now. And then parent receives this, enter the code that you received in your email, they enter it in there, and they submit, and that'll put them into the contributor workflow. So we hope that this is going to improve the process, and we noticed that there were a lot of folks who were dropping off as part of this part of the process, so we hope that that limits that quite a bit and gets more people through the FAFSA in 26-27. Thank you. I'm glad, like I said, glad to give good news where I can. Okay, so maybe not your favorite part of the presentation, but I want to talk a lot about our recent electronic announcement on fraud prevention. So EA App 2516 was about the department's new initiative related to fraud prevention. So in the past few months, the department has heard from a wide variety of different individuals, groups, entities, that there are some serious issues with fraud in the financial aid world, especially with respect to Title IV aid, and specifically having to do with identity theft and the ability of fraudsters to use artificial intelligence to complete coursework in online programs. The issue has become serious enough that we even heard about it from several of you at this conference. We've heard about it from states. We've heard about it from law enforcement. So the department recognizes that this is an issue, and we're taking steps to address it as quickly as we can. So we published that electronic announcement to explain the steps that we're taking, and there are two phases to the work that we're going to do to try to combat this. The first phase is really on the schools. So we didn't have time to implement a full solution immediately, but we wanted to make sure that we took action as soon as we could. So what that meant was that in the first phase, we would increase our verification selection rate, targeting especially V4 verification to identify more students who might be potentially folks who we would be concerned about from a fraud perspective. And that is what most of the EA covers and what I want to talk most about today. However, that is intended to be a temporary process because FSA is now working, I would say, pretty feverishly, from Aaron's perspective, on developing its own identity validation process that will be handled at the FSA level as part of the FAFSA process. So when that process is fully implemented, thanks. When that process, well, we'll see, but when that process is fully implemented, we plan to greatly reduce the amount of verification selections that we make because that is intended to be the long-term solution. So phase one, as you know, has already begun, and we have increased the rate of V4 verification at many institutions. our intent is to target applicants who are expected to receive Title IV aid at an institution for the first time during the summer. And we expect about 125,000 students will be selected. Now, we've heard some reports, including at this conference, that folks have been selected for V5 verification in many cases. So we hear you about that. We are looking into why so many students were selected for V5. It was really our intent to keep V5 verification to a minimum. So we're going back and checking with our contractors to see why that's going on. Keep in mind, and I'm sure you know this, that if you do get someone selected for V5, their income variables can be verified if you got the information from the IRS. But we know that that's still time and effort on your part to go through the student's file and verify the other fields. So we recognize that that is taking extra time, and we're checking into why those initially got selected. Of course, if the students do get selected, you do have to verify them. There's no way around that. So we hope that the new process, when it is up in the fall, will reduce this issue. But this is still a stay tuned situation as we monitor how things are going, and we are going to be continually checking in with you guys in the community to see if you think that the rates of fraud are dropping, if you think that you're getting a better handle on this on your campuses. So this is going to be a longer term effort through the remainder of the year. Oops, I went too far. So as part of the electronic announcement, we also made some changes to the ways that schools can complete identity verification, which have, in their own way, created a lot of new questions. So I want to spend a lot of time on this part of the electronic announcement to talk through the new options and explain a little bit more about what we had in mind, to answer at least some of your questions on these. So first, the first major change that we made is that we will no longer require a statement of educational purpose to complete identity verification. So good. I'm glad that's good for some folks. We actually know that that's actually a mixed blessing for some schools, at least for this year, because they've incorporated the statement of educational purpose into their verification process. And it's been a source of some confusion as to whether that's even allowed anymore. So I want to say up front that it is permissible. Many schools have forms that have the statement of educational purpose, as well as a place to include the certification about the identification. And if a student submits a form that has both things on it, as long as they've submitted the identity verification, the notarized verification, that's still acceptable. You can still accept that on your campuses. The only caveat is that if a student does submit a notarized certification of an ID and they don't submit the statement of educational purpose, you have to accept that, as long as the ID is acceptable in your view and everything looks good. We hope that most schools are not going to have to change their processes or workflows around this particular item. So the second thing that we did was we added some options and amended some of the options for students to complete verification. Previously, there were only two options. Either the student could come to the school in person and present their government identification to an authorized individual on the campus, or they could provide, if they were unable to come to campus, they could provide a notarized confirmation of the ID, as well as that statement of educational purpose. So obviously, as I mentioned, they are no longer required to provide that statement of educational purpose, but now there are four options, really three for most students, but I'll explain the other one in just a moment. So the student can submit a valid government ID in person or through a video call, so that's the big change there. For a student who can't appear in person, they can submit a certification from a notary that they appeared before the notary and presented a government-issued photo ID that confirms their identity. This third one is the one that's creating the most questions, very understandably. If you are working with a vendor that confirms student identity, and that vendor is compliant, and I've got to get this acronym right, hold on, with the National Institute of Standards and Technology, NIST, Identity Assurance Level 2, if they're compliant with those standards and you document a few things about that process, we will consider the student to have been verified through that process. So there's a lot more information to be provided about that, and I'll get into a little bit more about it in a second. But the fourth option here is if a student is confined or incarcerated, you can complete verification by accepting a confirmation of the student's identity by the responsible individual at the student's prison facility. So that's the way that it works currently for many institutions in the Second Chance Pell experiment. This is expanding it to include all prison education programs moving forward. So I also now want to, this is a lot, so I want to just say that up front. This is a lot of new information, so I want to unpack these options a little bit and address some of the questions that we've gotten on them. So let's talk about the first option right now. So the first option, submit a valid government ID or in person or through a video call. So this is essentially the same process as the original process where a student would come in person, show their ID, a responsible individual at the school would take the ID, generally make a copy, put it in the file, and then you would document who it was at the institution who had reviewed the student's identity. The intent with this one is to expand that option to include video calls. Now, obviously, there are a few significant differences between an in-person experience and a video call. But what we have in mind is that if you have a student who comes on and does a video call with you, the student would be on the video call with the responsible individual at your institution. They would show their ID on the video call. And if the institution wishes, one way to document that the ID is indeed who they say they are is to take a screenshot right then and there of the ID and the individual, as long as the details on the ID are visible. That's not required, so you could also just have that interaction between the student and the responsible individual, document that you had the interaction, just like you would if they had come in person, and then have the student send you a scan or a photo of the ID so that you can have that on file. So this is intended to be as close as possible to the in-person experience. So the second one, for a student who can't appear in person, they can still go through a process where they get a certification from a notary that they appeared in person. So this option is intended to just allow you to continue processes that were already in place. We know that this is a difficult process in many cases for students to go through a notary, but we wanted to ensure that we didn't want to eliminate an option. We wanted to be sure that you guys still had the option of doing this. So as I mentioned, if you have a statement of purpose attached to a form that you guys use, that's acceptable, as long as it also includes the piece that includes the notary certification of the individual's ID. And that process is still an option for schools and students. So the third one, I'll do as best I can with this one. We are still working through some of the questions that we've gotten on this one. We do have some answers, but we plan to publish FAQs on the Office of Post-Secondary Education's website on this as we get new questions and new things come up. So stay tuned. But I'll go through as much as I can on this one as far as to give you everything that I know right now. So the NIST standards are a set of standards that this federal entity provides that are quite rigorous, that are designed to be a standard that can be acceptable across entities, across different kinds of entities in the country. And so the idea is that if you want to use this version of the process, your vendor has to validate the student's identity, and then you must receive documentation directly from the vendor confirming that the student's identity was verified and under the NIST standard. So I want to be clear about that. It needs to be that they verified under the standard and the date of that verification. So we'll provide additional information about exactly what that looks like in practice, because I know that right now, that doesn't really mean a whole lot to folks, but we will provide more information about that in the future. Until we can provide more information on the specifics of what you need to do, if you want to take advantage of this option, what we recommend is that you work with your vendors to ensure that the vendor or the institution keeps on hand clear documentation about how the vendor complies with the NIST standard. The department doesn't check for NIST compliance. NIST doesn't check for NIST compliance. The vendor is going to have to show how it complies, and that's how you would document that you met this standard if you had a program review or audit. So if you are interested in pursuing that, we recommend that that's just a step that you take to ensure that you have all of your ducks in a row. So finally, for a confined or incarcerated student, as I mentioned, this is a process that has been used, at least in a version of it, has been used in the Second Chance Pell Experiment. You need to document, if you use this process, the date that the identification was presented to the responsible individual at the correctional facility, the name of the correctional facility official, and the name of the institutionally authorized individual who obtained the verification. So one method that you could use to collect all of this information is just an email from the correctional institution that includes all of those things. And if you have that, you could move forward and consider the student's identity to be verified. So these options apply to all students who were selected for V4 or V5 verification. I heard that there was a little bit of confusion in the earlier FAFSA update session on that. We're amending the slide before we post it. Including, and this is important, including those who were selected prior to the date of the electronic announcement. So this applies to everybody, not just those who were selected after the EA was released. There's one last question I want to address that we've received at the conference, and that has to do with what an institution is required to do if it's already dispersed funds to a student who is selected for identity validation, and then you're unable to complete that verification. In that case, it's considered a student overpayment. So if that happens, you would treat it as an overpayment, follow the procedures in Volume 4, Chapter 3 of the FSA Handbook. Obviously, you are, as always, welcome to return those funds on the student's behalf or return the portion of funds that you received to pay for institutional charges. You're not required to do so, but we always encourage schools to do that. It does help the student. Remember, of course, that if ultimately the individual whose identity, if it was fraud and the individual's identity was stolen, if they have an overpayment on the books, it is going to be a complicated process for the department to work through that once we reach that stage. And I don't have any information at this point about exactly how that will work or how that does work because there haven't been that many occasions where we've dealt with it. It has happened before, but we do expect that we may get more of those in the future. So, but it is a student overpayment in that circumstance. All of these changes will be official when we publish a Federal Register notice, which is in the queue right now. So do look over that Federal Register notice. It will have a lot of the details that I just shared with you right now. And as I mentioned, we also plan to provide some FAQs on the topic in the coming days. All right, so another significant announcement related to the FAFSA was EA General 2525. In this electronic announcement, we extended the late disbursement flexibilities that we had previously provided only to paper applicants, and we applied it to all 24-25 applicants, regardless of how they applied, if they were affected by one of the known issues that is in the technical frequently asked questions and known issues guide, or what we commonly call the TFAQI. Love that acronym. So Kira gave a great overview of where you can find that in their presentation, so I do highly recommend that you take a look at that. But if your student was affected by that, then you can take advantage of these flexibilities. The flexibilities allow a school to start the 180-day late disbursement window from the later of the date that the student withdrew or otherwise became ineligible for the award year, or the earliest transaction process date with an official SAI. So flexibilities are provided to students who are provided with, who are in this situation, if they had any of these known issues. If you have questions about this, we certainly encourage you to reach out to our contact in the Help Center and the Knowledge Center. But really, focus on the TIFACI. That is your set of issues, and it should include all of them. If it doesn't, again, reach out to us, and we can try to update the TIFACI to include it. But that should include as many issues as we announced. I want to be clear that the department announced, not things necessarily that came up on the student side or on the institution side. All right, so a couple of slides, obligatory on appropriations and program funding. So the Continuing Appropriations and Extensions Act to 2025 kept the Pell Grant at the same level. So maximum Pell Grant this year is $73.95 for 26-27, I should say. Sorry, for 25-26, I should say. Whoops. For 25-26, minimum Pell Grant remains $740. And the campus-based programs were also flat funded for the year, kept all of those the same. And back earlier this year in March, we already published the allocation information for your campus-based funds. So here are the direct loan interest rates and the changes for sequester. Sequester is still around after all these years. People have asked when it will sunset, and the answer still is we don't know. We hope someday, so we don't have to keep publishing this electronic announcement every year. But you can see the interest rates here, 6.39% for sub and unsub for undergrads, 7.94% for unsub for graduate and professional students, 8.94% for plus loans for both parents and graduate and professional students. Loan fees are 1.057%. Loan fees for direct subsidized and unsubsidized loans first dispersed October 1st, 25 through September 30th, 2026. Loan fees for plus loans first dispersed on October 1st through September 30th, 2026, 4.228%. And the Teach Grant maximum awards, which are reduced by 5.7% due to the sequester, the maximum is $3,772. Okay, here's another topic that I know a lot of folks have questions about. Financial value transparency and gainful employment reporting. So first, let's talk about the 2024 reporting cycle, which unfortunately is still going on. In February, the department announced in the electronic announcement GE 2502 that the deadline for the financial value transparency reporting for the 2024 cycle was extended to September 30th, 2025. And yes, that is one day before the next cycle is due, October 1st, 2025. We have not extended the deadline for the 2025 cycle. Therefore, the deadline to report for that cycle is October 1st, 2025. We have heard that schools in some cases still have not received confirmation from NSLDS that their reporting was received. So I'm taking that back. We'll talk with our NSLDS team to make sure that they're responding to folks to let them know if they have a question about whether their information was submitted. And we have taken back the suggestion that in the future NSLDS provide some kind of confirmation when the reporting is provided. And we hope to implement something like that in the next year. So what we recommend is that you get your 2024 cycle reporting done as soon as you can and start working on 2025 when you're ready. So for the 2025 cycle, just keep in mind that schools will generally only report for the most recently completed award year. So in this case, that would be 24-25, unless there is a very narrow exception. If you had a set of substantially similar programs, that's a tongue twister, that was exempt in the prior cycle, so if it was exempt for the 2024 cycle and then is no longer exempt, then you have to provide all the information for those programs that you would have provided in 2024. You'll have to provide that during the 2025 cycle. And that's actually addressed in our Dear Colleague letter on financial value transparency that we published all the way back last year. So I would recommend taking a look at that for more information about how that would work. Some quick program eligibility updates. Prison education programs, prior to dispersing Title IV aid, school has to seek approval, as you know, for a prison education program offered at the first 2 locations where the institution offers a prison education program. EA General 24-118 provided more information about how this process will work moving forward. That supersedes some prior guidance that we had on how this works operationally. Previously, we had a PDF form that schools had to print out or had to fill out and then submit through the document center in COD. Now you will simply use the e-app to go through the entire process for prison education program applications. The only other thing I want to say about this is that for those of you who are Second Chance Pell participants, that experiment ends June 30th, 2026. So if you haven't started the process of moving your program through the PEP application, you should get working on that as soon as possible. We've heard from accrediting agencies that some of them may take time, even into months, to finish their review of prison education programs. So if they haven't done that yet, you really need to get working on it, because if you don't have that completed by June 30th, 2026, the program will be treated as ineligible at that time, and essentially, if you have a crossover period, you'll be able to fund students through the end of that crossover period, but then until you get your program transitioned to a PEP, your students would be ineligible. So it's really important to get on that as quick as you can. The Second Chance Pell team at FSA is there for you and will answer any questions that you have. We also recommend that if you think you're going to struggle with that deadline, let the Second Chance Pell team know. There's no stigma. We understand that in many cases there's factors outside the school's control resulted in them not being able to get it done if that happens, but we want to be aware of those instances and try to work with you as best we can to help you get it done on time. The other item here, career pathway programs. So just a reminder, students, in order to qualify for Title IV aid using one of the ability to benefit alternatives, and as you recall, that includes an ability to benefit test, completion of 6 credits or the equivalent, or completion of a state process. The student, unless they're grandfathered, where they were first enrolled before July 1st, 2012, they have to be enrolled in an eligible career pathway program. Now, before the regulations were published back in 2023, schools would simply document that they had an eligible career pathway program. There was no approval process. There is an approval process for these programs now, so I just want to remind everybody about that. EA General 24-151 provides more details about that process. An institution that offered, and these at the bottom of the slide, I want you to focus on these if you do use ATB. If you offered one or more career pathway programs prior to July 1st, 2024, you must apply to have one of those certified as Title IV eligible by the time when you submit your next EAP application following following January 1st, 2025. So if that's going on right now, so if you have an EAP in place, you should have, if you submitted that, and if you haven't done an EAP since then, the next time you do one, whether it's a recert or another eligibility update, make sure that you included your career pathway program in there. If you have not offered a career pathway program prior to July 1st, 2024, you must submit that program the first time that you offer a career pathway program for Title IV purposes. So that's the difference in treatment between the two situations. All right, so this is another topic that is near and dear to my heart, and I know is a big issue to you guys. So you've all heard the news that the department has made some staffing changes. FSA was not exempt from that. And we've lost staff too, and many of the staff that were lost at FSA were in the compliance and oversight area. So that area is doing, in my view, an incredible job of reforming themselves, finding new ways to improve their procedures, make themselves more efficient, get questions answered. But just to be very candid, we know that your questions are taking a very long time to get answered, and we're doing our best. So We do believe that the time that it takes to get an answer is going to be reduced in the near future because of a lot of the work that those teams are doing. But we acknowledge, I just want to say that out loud, that it is taking time to get your questions answered. Please be patient as much as you can. And the other thing I will say is please, 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 please send your questions to caseteams@ed.gov. We know that you have your favorite people, or at least you have new favorite people if you were working with folks who are no longer around. But when you send questions to multiple people, it requires the team to coordinate among all of those people and figure out who responded when and what they said. So it actually sometimes increases the time that it takes to get your answer, and it makes the team take time out of the schedule that they are already facing real challenges with. So please send those inquiries through caseteams@ed.gov. If you have something urgent, you can contact Jeremy early, and he may really be unhappy with me for doing this. He said it at our session yesterday. You can contact Jeremy. He is the acting director of the compliance teams and all that they do. He will work through the process and get it to the right person if you have some if you have an emergency, which doesn't happen very often. We also mentioned that in that session, so I do recommend that you check that out if you haven't, that we wanted to remind folks that if you have a simple new program, if you are a public or nonprofit institution and it's a degree program, you don't even have to report it. It's something that you can self-certify. So just do it that way. We know some schools submit their degree programs, and we don't know why, but they do. And it's okay to do that. The department will accept the information, but you don't have to do that for degree programs in those situations. Proprietary institutions do have to submit all of their programs currently. For non-degree programs, if you are fully certified, you also have the ability to submit the program and then just start providing aid for that program. You do not have to wait for the department to provide approval unless you're otherwise required to because you're provisionally certified or for some other reason. So obviously, if there is a problem, then you could end up having to repay liabilities if that happens, but there's almost never a problem. So if you're confident that the program is eligible, then just send it to the department, do the update, and then move on. And we'll get to it as soon as we can. So just want to point that out as one of the options that you can use. So we're doing a lot to improve efficiency. We're revamping the program review process, redesigning the recertification process. One of the major changes that we've made here is to eliminate the requirement for our folks to analyze your policies and procedures. So what that means is you can self-certify that you got policies and procedures that are adequate. And that is a big chunk of time that they take out to do that work. They are also working to eliminate the requirement for you to provide information about all of the individual personally identifiable information for all of the folks that you have in the past. For example, all of your board members. You won't have to do that in the future. Yeah, so we're doing our best to make these things more efficient, both for you and for us. We are also focused on resolving open issues, including program reviews, financials, audit resolutions. We've got 80% of those now resolved, and HCM2 claims, which we don't currently have any backlog on right now. So we're doing our best on this. Just a couple of things about Partner Connect 3.0. These updates to Partner Connect, the primary thing that we're doing is shifting system access from the participation management system to Partner Connect. If you know participation management, it includes SAIG, which essentially includes access to all major FSA systems. So we hope that with this process that it'll be more efficient and that it'll eliminate, and we hope to eliminate as much as we can of any paper processes. So this will replace requirements for paper signatures of all kinds. It will replace it with DocuSign. So that's another thing we hope that will help. So if you want more information about these changes, it's in EA General 2521. All right, so the last thing I want to talk about today is outreach to borrowers. So if you went to Eric's excellent presentation on the loan updates. You heard that the department is facing an issue with repayment. We have too large a portion of students who are delinquent on their loans and could end up in default in the near future. So the department is taking a number of steps to re-engage with borrowers. One of the things that we're doing is we started an engagement campaign in which we are reaching out to borrowers with loans in default, 60 days delinquent but not yet defaulted. We're reaching out even to borrowers in good standing, borrowers in the SAVE forbearance, borrowers who selected the lowest monthly payment amount or SAVE on a pending IDR application. Since these are all different situations, we reached out to all of them in slightly different ways. We also did a social media campaign to reach out to get in touch with both schools, and hopefully students also see our social media. But we also want schools' help to do this. So in EA General 2519, we requested that institutions perform outreach to remind former students of their loan repayment obligations. So we recommended that for any student who was enrolled at the institution since January 1st, 2020, and for whom that you have contact information, so because you may not, remind the borrower that they're obligated to repay federal loans, suggest that they review information on studentaid.gov about the options that they have, request that they log into studentaid.gov and update their studentaid.gov username and password, because that's it's going to be really important for them to do that, especially if they're delinquent. And we just want to note at the bottom here, we are providing some additional resources for you. We just published an EA General 2527, which provides some information about the NSLDS Delinquent Borrower Report, DELQ01, another great acronym. But that gives you some information about the resources that are currently available, and that report is really valuable to identify the students that you have, the graduates who are potentially in delinquency. And finally, we committed to publishing a list of non-payment rates, loan non-payment rates by institution. That is coming soon, I believe, likely in just a few more weeks. But stay tuned for that. We'll have another announcement about that, and it'll go on the studentaid.gov website. And that's all I have for today. Thank you guys so much for having us. We really appreciate all of you. You're an amazing community. Thank you.